public financial management, especially subject financial reporting for the public sector entities. I am your presenter, Francis Aruturi. The contents of this presentation: there's an introduction, then we'll go through the 4 units of the syllabus, and then we end up with a conclusion. In the introduction, we'll talk about the need for this type of subject in the Zika syllabus. All we are saying is Zika wants to train professionals who will be able to handle public sector financial accounting, because most of the training has been in the public sector. So for this one, we want to train accountants who can handle accounting in the public sector. The examination information. You must know that there are 2 parts of the exam paper. There's section A and section B. In section A, we have a 40-mark compulsory question. This will cross across the syllabus. In section B, we have 4 questions. You're supposed to pick 3 out of 4. The syllabus in brief, like I said, has got 4 units. The bigger weightage is on financial statement preparation, which you are expected to know if you have to perform well in these examinations. The aims and objectives of the presentation is mainly to focus on a number of areas. What is very important is the exam techniques. I'll take you through what I think are the common mistakes students make in order not to perform well in this paper. There is a 15 minutes reading time. That time must be used properly to plan your questions. You also select the question you want to attempt. It is very, very important that you use the 15 minutes to your advantage, because it's the rare aspect in most of the exams. So if you plan your answer, choose the right questions, you are bound to succeed. The objectives of financial reporting framework of public sector entities are outlined in Unit 1. The weightage for this unit is 15%. So it is important that you pay attention, because it can be the game changer between your pass and your fail. After you've done Unit 1, we expect you as a student to be able to demonstrate certain competences. For example, you should be able to understand the roles and objectives of the accounting standard in the public sector, which we normally call the IPSAS. There is a board which makes these standards. They develop them, but through a consultative process. So it is important that you understand that. We have the International Public Sector Accounting Standards Board, which I'll be calling just the board. This is responsible for developing the IPSAS, which are used in the public sector. Even NGOs are expected to use them, except what we may call the business entities, which may be run on a profit basis. In any aspect, when you are developing accounting standards, we have what we call a conceptual framework. It is important that we appreciate this, because it presents us with the underlying concepts. The concepts are the ones which are used to develop IPSAS. Now, the IPSAS do not in any way contradict the conceptual framework. In fact, they're supposed to complement each other. The elements of the financial statements, the big elements are the assets, the liabilities, the expenses, and the revenues. We also have the owners' distributions, owners' contributions coming in. But the most important things are the assets, liabilities, the expenses, and the revenues. It is also important to note that most of the revenues government get is because of the taxation or the legal framework. So the way we account for the revenues in the government versus the private, there is a difference. So we have to be very careful when dealing with public sector entities or even NGOs. For anything to be included in the financial statements, it must pass the criteria for revenue for recognition. Recognition is an important aspect of financial statements. If it does not pass that criteria, then it cannot be recognized in the financial statements. Otherwise, the financial statements will not be showing a true and fair view. So we must make sure that the criteria is fulfilled. One of the most important things is the definitions are given. So which means if you are going to talk about including an asset, that asset must be able to meet the definition of an asset according to the criteria given in the standards. Like in most cases, even in the private sector, what we do is when we're including items in the financial statements, in most cases, we use monetary terms. So it's important that we know how to measure. Luckily, your standards have already given various measurement bases which you can use in the financial statements, especially when you're recognizing items in the financial statements. The main asset measurement bases are the historical cost and the market values. You may even use the replacement cost, but in most cases we use historical cost and market values. When you're measuring liabilities, it's all the same. We also use historical cost or market values. But we also have other aspects of measuring those liabilities in the financial statements. The measures which are using to attach values to these aspects which go into the financial statements may be observable, unobservable, may be specific to the entity or otherwise. But the most important thing is once we choose a specific classification, we must be consistent. The most important thing to know also as a student is what the board is trying to do when developing these accounting standards is to make sure that they converge. There should be convergence between the public sector accounting standards and the private sector accounting. They should converge. So at the end of the day, whatever is reported in the public can also be the same thing reported in the private sector. The most important thing, again, which you have to know is the aspect of qualitative characteristics of financial statements. Okay? The information we give to the financial statement is not just about quantitatives only. We also have the non-quantitatives. In this case, we've got issues to do with relevance, because there is no point in producing financial statements which are totally irrelevant to decision makers. We must make sure that whatever we produce is fit for purpose. The other thing is also faithful presentation. Faithful presentation simply means let's reflect the substance of the transaction, not necessarily the legal form. The legal form can actually lead to accounts not showing a true and fair view. So it's important that the qualitative characteristics are also taken into account when preparing these financial statements. Understandability is also an important aspect, because when you are producing accounts for the public sector, you all know that there are various users of this information. Some of them are not financially literate. So it's important that we ensure that the information presented is understandable and can even be verified and compared. Auditors come to audit this. There are constraints which we must acknowledge when providing this information. In government, some of the information may not be made available to you. So it's important that as an auditor, as an accountant, make sure that you appreciate the pervasive constraints on the information included in the financial statements for the public sector. The link between the accounting standards and the IFRS, those accounting standards used for private sector, is such that at the end of the day, we would want the public sector accounting standard, the IPSAS, to be the same, just like the private sector, so that people can be comparing information on a similar basis. However, we must note that the public sector has got its own characteristics. For example, the aims of government, if they have assets, is not to make a return on investment. Normally what they do is to provide a service to the citizenry. So it's important that when you are trying to bring out the information, those uniqueness of the public sector must also be brought out in financial reporting. That's the only way it can be useful. Without that, people may not be able to make decisions that may not be reliable and useful. In the public sector, we've got two aspects of accounting standards. We've got the cash basis and the accruals. Zambia uses the cash basis. But what provides more information is the accruals basis. So the board encourages countries, various governments, NGOs, to adopt accruals. I'll now take you through 3 exam type questions on this unit. My focus will mainly be on the exam techniques. So the first question is about the main objectives of financial reporting in the public sector. The second question basically deals with the conceptual framework. So you expect a question on the conceptual framework in most of the exams, because that's the basis of these accounting standards. The last one is on the measurement basis. Okay, just the definitions. So it's important that you appreciate the definitions, because the examiners may bring this. In fact, if you look at the past papers, they do bring these questions. What I've done is to go through your revision kit and then picked up some of the questions to make sure that you understand how to answer this question properly. Now the top tips, if you look at the common mistakes in this unit, most of the answers are too brief, okay? Suggesting that students do not recognize the importance of reading widely and understanding the various definitions. The first question is the 20 marks, but the 20 marks is not broken down. So it's important that you appreciate how the 20 marks will be awarded by the examiners. If you don't do that, your answers may be too brief to get the whole 20 marks. So it's important that before you start answering any theoretical questions of this nature, do an answer plan. The answer plan will make sure that you also appreciate the verbs which the examiners are using. We now move on to Unit 2, which is contained in the third part of my presentation. This simply deals with the role and significance of the public sector accounting standards, the IPSAS. The weighting is 30%. So meaning, for you to be able to tackle that compulsory question, you need a firm grounding in this unit as well. It is important to appreciate the verbs or the command words examiners will use in this unit. This will make the difference between passing and failing an exam. The main concepts which underlie the preparation of the financial statements, especially for the public sector, are things like the going concern, consistent presentation. Those are the main aspects. So going concern, we are assuming this entity will continue in the foreseeable future. It has no intentions of closing to go into the foreseeable future. However, what you notice in the public sector, there are a lot of uniqueness there. You may find that you've got this entity which has got more liabilities than assets, but because of this government support, or because it has got legal framework where it can easily get support from the government or levy people to get money, it will still considered to be a going concern. So going concern must be looked at carefully in the public sector. Compliance with IPSAS. When you comply with IPSAS, whether you're a government ministry, you are an NGO, you are a non-profit making organization, charitable organizations, when you comply with IPSAS, there's a lot of confidence in your financial reports. But there is a catch there. What you have to do, if you have to say in your financial statement that you have complied, then you have to comply with all the requirements of the IPSAS. If you don't comply with all the requirements of the IPSAS, just know that you cannot claim to have used the IPSAS. You must comply with all the requirements. Any departure means you haven't complied. Now the responsibility for financial statements. These financial statements, whether in the public sector, the government, are prepared by the Accountant General, like in Zambia. And also the Minister of Finance must also take responsibility for these financial statements. The Auditor General's office will just come and examine and give an opinion on those financial statements. But otherwise, the responsibility lies with the Accountant General and the Minister of Finance. Use of the financial statements, it's important because whenever you're preparing information, that's why we normally call it financial reporting. We don't say financial accounting. Financial accounting is for the lower levels. When you reach this level, the aspect of communication must be emphasized. So therefore, in financial reporting, we make sure that whatever we are doing, even the contents of the financial reports, are tailored towards the users. The users want to use this for accountability and decision making. The users of the financial reporting standards, most of the case, it is the government itself, the residents, the resource provider, the donors who want to know what is happening to their money. So it's important that when you're doing those financial reports, that is in your mind. That's the only way the financial reporting can be credible and meaningful, and even useful to the stakeholders. That summarizes Unit 2. Okay? But that unit, what I've done is also to give you practice exam questions, just to make sure that you see what can happen in the exam. I have given you 3 questions. The first one has to do with the public sector. Okay? Where they will say the financial position, financial reports, and then we expect you to have prepared accounts which show a true and fair view. One aspect which comes out is a fair presentation. So question 1 is testing your knowledge on fair presentation. Question 2 brings out the users. You're expected to know who are the users of the financial statement. Then question 3 brings out the going concern. It's an important aspect. There's that uniqueness in the public sector. We'll go to the top tips on question 1. Question 1, the common mistakes for students is failing to identify and interpret the command words. When the examiner says explain, make sure you do what? You explain. When he says discuss, you discuss. So most of the students who are able to recognize those command words do very well. In this case, they use the word discuss. So it's important that we discuss what can make the financial statements show a true and fair view. That fair presentation is very, very important. On solution 2, the question 2, the biggest problem is most students would want to list the users. The question is very clear. It's talking about explain who the users are. So if the explanation is missing, then you've missed the marks. You may not get everything. Although you can get 1 or 2 marks, but not all the marks. This is where we expect students to maximize their marks and enhance their chance of passing. Because it's just a matter of explaining who are the users are. And the theory, the manuals are very clear. The revision kits can actually assist you master how to do this. On solution 3, where we say we are discussing the going concern. So it's important that we appreciate that going concern must be discussed in this context from a public sector point of view, not from a private sector point of view. If you do that, then you're likely to pass. Again, the examiner has given you some double commands, discuss and contrast. But it doesn't matter. All you have to do is if you go going concern in the public sector, you can just go for that and get the easy marks. We now proceed to Unit 3, which is contained in the 4th section of our presentation. Unit 3 is very, very important. That's what captures 40 marks. If you want to do well, the 40 marks is normally in Unit 3. You need to know how to prepare financial statements for the public sector. The weightage, like I said, is 40%. So if you can do well in this 40-mark question, which is normally part of the question 1 I was talking about, then you're likely to pass this exam. The competence required, if you look at the first 2 units, they are more of theory. If you look at this one is more of application, because we expect you to prepare the financial statements. We expect you to apply the IPSAS. So what we'll do is we'll take you through the IPSAS, and then we'll also give you a few exam practice questions, just to make sure that you're able to appreciate how this exam comes, and also, like I said, you enhance your chance of passing. So you find that the contents and presentation of the financial information in the financial reports are guided. You can't just wake up, no, they are guided. So there is an IPSAS which guides us on what should be in the financial reporting statements. So in the cash basis IPSAS, we have two aspects. There are certain things we have to include because they are required by the standard. Those are mandatory. There are certain things which are not mandatory, which we expect you to add in if you want the users to appreciate what you're talking about. But the most important things, don't leave out the mandatory aspects. If you do that, you have not complied with your IPSAS on a cash basis. So there are a number of definitions given. So the whole idea is, when you're using the cash basis IPSAS, would want to know, where did your money come from? Where did the cash come from? And also, where was this cash used? And at the end of the day, what has remained? So those aspects must come out in your financial reports. We also would want you to maybe recognize other things. For example, want your additional comments. Other cash may be there, but maybe there are restrictions. If there are restrictions, those must come out. Okay? If you don't bring out the restriction on the cash which is available, people may think it's up for spending. It's important that restrictions are reported on, conditions, terms, all those are reported. If you recognize an error, if that error relates to the previous period, the corrections must be made in the previous period. And that must be disclosed in the financial statements. If you don't disclose, then as far as you're concerned, you're not showing a true and fair view. Now the non-mandatory aspects, like we said, the going concern can be talked about, okay, but it's not mandatory. You can talk about extraordinary items, okay, and a number of other disclosures. One of the most important things in the public sector is the issue of related parties. So related parties must be disclosed because they can easily influence the aspects of the financial reports showing a true and fair view. So reporting of related parties is an additional statement you can put in your financial reports for using the cash basis. We now turn to the accruals basis. Accruals basis is what provides a lot of information, but most of the governments do have challenges adopting the accruals basis because it requires a lot of resources, like as we shall see in the last unit. So it's important that we appreciate this accruals basis. The board encourages governments and other NGOs, including non-profit, to adopt accruals. They can start off with a cash basis, there's no problem, but they must make sure that over the years, they try to adopt accruals because provide more information for decision making, including accountability, transparency. That is what is needed. So accruals is the in thing. The first IPSAS on accruals is IPSAS 1. This simply talks about how to present the financial statement. So it gives us the format, the contents, and the like. So it's important that we know in the same financial statements, what are we talking about? So it gives us the full package. So in that package of financial statements, there must be the statement of financial performance, statement of financial position. All those must be part, including the notes, and include the cash flow. So it must be in there. So IPSAS 1 simply gives us the presentation of the financial statements. We move to IPSAS 2. IPSAS 2 talks about the statement of cash flows. Statement of cash flows is an important aspect. In IPSAS 2, we are taught to categorize these cash flows in what came from the operating activities, what cash flows came from the investment activities, what cash flows came from the financing activities. So those classifications will assist the decision maker to appreciate how the business is performing. There are two ways of preparing this statement of cash flows. We have the direct method, we also have the indirect method. The IPSAS encourages people to use the direct method. And if you've got a direct method, you can actually use the cash book to prepare the direct method, there's no problem. Okay. Others prefer the indirect method. We go to IPSAS 3. IPSAS 3 just encourages consistency in the application of accounting policies. If you are changing any accounting policies, those must be disclosed, because people must know. Because whenever they are trying to appreciate the performance, they look at they compare. So if you prepare accounts based on the same basis, then comparisons are more meaningful. IPSAS 4 is the effects of changes in foreign exchange rates. You know, foreign exchange rates can lead to losses or even gains. So it's important that you are guided using IPSAS 4 when you're preparing financial reporting standards, which has got the foreign exchange aspects in it. So it's very, very important. And the way you treat those exchange gains or losses matters. There are exchange losses on monetary items, there are also non-monetary items. Some of them you have to take them to the statement of financial position. Others, you take the statement of financial position. So it's important that you know where to take those differences, exchange differences. IPSAS 5 talks about borrowing costs. So borrowing costs, e.g. interests. Normally what we do in preparing a financial statement in the public sector, we actually charge them to a statement of financial performance. But there is an aspect where you have to capitalize them. You only capitalize if the borrowing cost relates to a qualifying asset. Either you're constructing an asset and you got a loan, that loan can be capitalized. So it's important to know when to capitalize and when not to capitalize. IPSAS 6 talks about consolidation of financial statements. Now in the government circles, consolidation may be a bit challenging. But at the end of the day, consolidation simply means we want to look at these accounts as if government is just one unit, as if any organization involving a number of companies belongs to one unit. The way you prepare it, the basis are almost the same, because intra-group transactions must be cancelled completely. But you must make sure that we appreciate the difficulties which may face in the government. IPSAS 7 talks about investment in associates. When you invest in an associate, then we are saying you have significant influence. Now if you have significant influence, then you cannot just talk about the dividends you are receiving from that entity. You may go further and get a share over the assets. That's what we call the equity method. So it promotes that if what you've invested in is an associates, you've got that significant influence. You can appoint board members and the like. IPSAS 8, that talks about joint ventures. In joint ventures, we've got joint control. Joint control of operations, assets, or even the entities themselves. Again, the way you report is something which has to reflect those various interests. IPSAS 9 talks about revenue from exchange transactions. Like I said, in most of these government institutions, the revenues which are obtained is because of the legal framework. So it's important that we recognize when those revenues have met the criteria in IPSAS 9. If it has not met the criteria, please do not recognize that. IPSAS 10 talks about reporting in hyperinflationary countries or economies. So it is important that when reporting those economies where the inflation rate, IPSAS 10 talks about financial reporting in hyperinflationary economies or countries. Those are countries where the inflation rates are 100% and above. So for those countries, you find that financial reporting becomes a challenge. You must make sure that when preparing financial statements, at least we ensure that we choose how to report in current terms so that comparisons are more meaningful and useful. IPSAS 11 is construction contracts. When you're undertaking a contract, reporting becomes a challenge because there will be that infighting between prudence and accruals. Prudence will demand that do not take into account any profits. But accruals also say, no, can you match the revenues and the costs? So at the end of the day, the standard guides us. We have to make sure that we check the degree of completion. Based on the degree of completion, some of the profits can be taken into a particular accounting period. Inventories. Inventories are a very key feature, especially if we've got an institution which manufactures. Government does own shares in various companies which have got what? Manufacturing operations. So you find that the inventories must be valued at the lower of cost and net realizable value. The standard clearly gives the definitions of cost and net realizable value. Although, because I've already said the public sector has got its own uniqueness, you may find that certain aspects may be valued at market value. But it's important that overall we appreciate that valuation of inventories should be based on the lower of cost and net realizable value.
Take your career prospects to the next level with Zika.
Our diploma in accountancy is an essential qualification if you're planning on entering the accounting profession.
The Zika tax program at both certificate and diploma level equips you with an enhanced understanding of the field of taxation.
Our diploma in public sector financial management is ideal for accountants or trainee accountants working in the public sector.
And CA Zambia, a respected designation designed to ensure that graduates are highly trained to hold senior positions in the workplace.
You can study through flexible options like self-study as well as part-time or full-time through our accredited tuition providers.
Zika sponsors the top CA Zambia graduate to the One Young World Summit for Young Leaders and also offers scholarships to the top university accountancy graduates from recognized universities.
Visit zika.co.zm now for more information or find us on Facebook and LinkedIn.
Don't delay, your future awaits.
Verse 13 talks about leases. Leases are an important aspect. Most of the operations, most of the institutions do get access on this. But it's important that we're able to categorize between finance lease and operational lease. If you're looking at the lessor's point of view, I think the accounting is a bit straightforward. Now, the lessee, we may find that using the concept of substance over form, the lessee may also capitalize. That's why if you're dealing with a financial lease, you capitalize and depreciate. Strictly speaking, that is not your asset, but you still capitalize and depreciate, because by doing that, you started saying, we are going to show a true and fair view and make the accounts more credible to the users. IPSAS 14, events after reporting date. When you're preparing these financial reports, don't think all the events will be known at the period end. Some of the events may be known after the period end. Now, those events, the way we treat them, we are guided by IPSAS 14. They may be adjusting events or non-adjusting events. For adjusting events, they must be presented or disclosed in the financial statements. For non-adjusting events, if they are material, it's just a matter of putting a note. But it's important to distinguish the two, adjusting events and non-adjusting events. IPSAS 15 talks about financial instruments, the disclosures and presentation. Although this standard was abolished, it was replaced by IPSAS 28, 29, and 30. So IPSAS 15 is no longer there. IPSAS 16 talks about investment property. Investment property are held for rental purposes or for capital appreciation. So if a property satisfies the definition of investment property, then it must be shown separately in the statement of financial position. And also, we may choose either to use the cost model or the fair value model. Once you choose either of the two, make sure that you follow what the standard says. For example, if you choose the fair value model, you do not depreciate, which means you just be showing the changes as charges in the statement of financial performance. If you choose the cost model, you have to depreciate. IPSAS 17 talks about property, plant, and equipment. If you are familiar with the accounting standard IS 16 in the private sector, it's more like the same. But if you look at the assets in the public sector, they include other things like specialized military equipment, heritage assets. So because of that uniqueness, you find that under IPSAS 17, the accounting is a bit broader and it includes a lot of assets. You're also allowed to use either the cost model or evaluation model. But once you choose one, please make sure that you stick to it. The cost model is a bit straightforward. Once you choose to evaluate, make sure that you be taking into account those evaluation surpluses or losses into account. And accounting for those may be a bit challenging. That's why most of the institutions simply stick to the cost model. Now in IPSAS 18, we've got segment reporting. Segment reporting simply appreciates the fact that the users may need much more information. Now if they need much more information, then we have to report the various parts as well. Now for you to be able to define what a segment is, management judgment is important. We expect management to exercise professional judgment so that they're able to report on those segments. IPSAS 19 talks about provisions, contingent liabilities, and contingent assets. A provision is a liability, which means a present obligation. A contingency is not a present liability, it's a possible liability. So the way you account for those differs. The guiding point is the aspect of prudence. For provisions, since it's a liability, it must be included in the financial statements. For contingencies, for contingent liability, please, those must just be disclosed in the notes of the accounts. For contingent assets, you have to be very careful if you're even going to put in the notes of the accounts. IPSAS 20 talks about related parties. You can see that under the cash basis IPSAS, that related parties was just part of the non-mandatory disclosures. But under accruals IPSAS, this is guided by a standard. So IPSAS 20 talks about related parties. Related parties are an important aspect of credible financial reporting. If they are not identified and disclosed, it's very easy for those financial reporting statements to be manipulated. So it's important that the financial statements identify these related parties and disclose the transaction with them. It's the duty of the directors, including those responsible for preparing financial statements, to identify these. Most of the companies may have a system. Most of the entities may have a system of identifying these because they may require approvals. IPSAS 21 talks about impairment of non-cash, because we also have a standard dealing with impairment of cash-generating assets. So IPSAS 21, impairment of non-cash generating assets. All we have to appreciate is, yes, we have depreciation, but the most important thing is that impairment will capture situations where there is something either within the entity or outside the entity which reduces the value of that asset. What you do to get the impairment loss, all you have to do is compare the carrying amount, which is in your financial reports, versus the recoverable amount. Recoverable amount is the higher of the fair value and the value in use. So it's important that you do that periodically. Because if you don't do that, definitely the financials may not show a true and fair view. IPSAS 22 talks about disclosures. Disclosures in general government sectors. Now, these are sectors which have no profit motive. So if they have no profit motive, then it's very difficult to assess their performance using the market, because there's no market. So it's important that there are a lot of disclosures that people appreciate. Resources are being used, but at the end of the day, there's nothing coming out in terms of return. But that's the nature of these operations. So again, IPSAS 22 guides us on how disclosures can be made so that the various stakeholders can appreciate such entities. IPSAS 23 talks about revenue from non-exchange transactions, taxes and transfers. So it's important because these are guided by the legal framework. So therefore, even the accounting must mirror the legal framework. Without that, then our accounting will not be able to withstand the legal aspect. So it's important that whatever you're talking about in terms of accounting marries with the legal framework. So taxes, transfer, that have got their own way of accounting for them. Even collections, if you look at taxes, there is a legal framework which must be reflected in the way we recognize revenues. IPSAS 24 talks about presentation of budget information in the financial statements. Now, this standard is very relevant for those entities or governments which make their budgets publicly available. Okay, if you make your budgets publicly available, then when you're preparing these financial reports, we expect you to also talk about the budgets versus the actuals, so those differences can come out. IPSAS 25 talks about employee benefits. When an employee leaves an organization, either through natural wastage, or maybe they've retired, or they've resigned, or they've been dismissed, what is important is their benefits they accrue while they're still working. Some of them, you find they can still continue getting paid even after they've stopped working. Now, those benefits, how should we recognize them? So according to IPSAS 25, we are saying once those entitlements are earned, we have to push a provision in the accounts. We don't have to wait until they retire. But the biggest problem is we have two types of these plans. We've got what we call the defined contribution plan and the defined benefit plan, where the employer We just say, okay, you should be contributing, the employer will be putting something, we don't contribute, the employer contributes. That is a very simple way to account for. For example, the NAPSA. NAPSA is very easy to account for because you just look at the statement, these were your contributions, these were your employer's contributions, here's how much plus the return, so it's easy. But when you look at the defined benefit plan, where you're saying, this employee, once he reaches 55 years, will give him maybe 5 times the annual salary. Now, you may not even know what the annual salary will be at that time. So most of the companies are struggling to make sure that they are able to meet those benefits. So therefore, accounting for defined benefit plans are a difficult aspect. And the standard encourages the use of actuaries, okay, the experts who know how to make valuations in this area. IPSAS 26 talks about impairment of cash. The other one was non-cash. This one is cash-generating assets. The standard gives the steps which you have to go through and how you have to account for any surplus or deficit. So it's important that you distinguish between impairment of cash-generating assets and impairment of non-cash. IPSAS 27 talks about agriculture. Now in Zambia, agriculture is what the government is pushing for. So therefore, all things being equal, we expect proper accountants with the proper skills in accounting for agriculture. IPSAS 27 gives us the guidelines. Okay? It's important that distinctions between biological assets and agricultural produce. Okay? Beyond that, we'll go into the standard which deals with inventory. So it's important that we appreciate what are biological assets, what is agricultural produce. Okay? Because beyond that, the standard inventory comes in. This is a very important aspect for accountants. Most of the accountants are very good in manufacturing operations, but for agriculture, I think we don't offer a lot. So this standard will guide us and will give us what is supposed to be done. IPSAS 28 deals with financial instruments. Okay? There are a lot of financial developments, so it's important that financial instruments, accounting for them, there's proper guidance. It's very pronounced in the private sector. But like I've said, in the government and the public sector, these things are also being imported into there. So it's important that financial instruments are presented and accounted for properly. So IPSAS 28 simply talks about presentation of financial instruments and nothing more. IPSAS 29 is also about financial instruments, but it talks about now how do we recognize the financial instruments? How do we measure them? So it's important that we appreciate that. Okay? It's a very complicated area, but still with the guidance of IPSAS 29, it's very easy for us to run through and be able to answer questions properly. IPSAS 30 is also about financial instruments. Now, this is now about disclosures. What is supposed to be disclosed in our financial reports for them to be useful to the users. So it's important that we appreciate our IPSAS 28 and 29 simply complements our IPSAS 30. IPSAS 31, intangible assets. So intangible assets may be classified as having an indefinite life or a finite life. If it has got an indefinite life, then we don't amortize, which means we just have to check for impairment. If it was a finite life, we amortize over its useful life. IPSAS 32 talks about service arrangements. Okay? Now this standard is simply for the guarantor, who is normally the government, because you normally have these private-public partnerships. So this can be a very important standard which can guide how you do your accounting. Okay? So for the government, as the grantor, okay, it's important that this standard is followed. Okay? If the government has got control, those assets may be put as a non-current asset in the financial statement for the government, if there's that control. If there's no control, please, the assets belongs to the other party. IFRS 5, discontinued operations and assets held for sale. There is no IPSAS at the moment. So that's why the manual talks about IFRS 5 so that we can use what is the private sector. In fact, the board, the IPSAS framework, authorizes this. So if there is no equivalent standard in the public sector, you can use what is pertaining in the private sector. So IFRS 5 to the discontinued operations and the assets held for sale. These must be disclosed separately for the accounts to be useful to the users. I'll now take you through practice examination questions and solutions. Again, the focus is to make sure that you appreciate how to answer these questions. They may be demanding, like I told you, this is a 40-mark compulsory question, but it's manageable. There may be aspects which are easy to handle. The first question will talk about the core principles of the cash basis IPSAS. This is simply a knowledge-based question. So if you know those, you can actually get your 10 marks. The other question, question 2, is from your practice and revision kit. So what I've done is I've put where these questions are coming from, just to guide you. Others may be my own innovation, but most of them are coming from the practice and revision kit, including your manuals. So it's simply about definitions. Okay? But the words used there by the examiner may be intimidating, but please, if you know how to define them, still get your 20 marks. Question 3 is about financial statements. You are expected to prepare financial statements. So question 3 is like what you may get in the compulsory question. Question 4 is about the differences, especially between, for example, the budgets and the financial reporting, because in the public sector, you may find that the recognition criteria in the budget is different from the recognition criteria in the financial statement. So it's important that we appreciate those differences, even the way you bring in these items. Okay? The budget we prepared on another basis, financial report on another basis, but it's important that we appreciate. It's a theory question, which we expect you to score highly. Then question 5, is again from the practice and vision kit. It talks about the IPSAS 1. So we want to know whether you can prepare accounts as guided by IPSAS 1. Question 6, you are given a trial balance, and you are expected to prepare financial statements. Okay? The other one, yes, financial statement, but it was just picking on the cash flows. This one takes you through everything, and you can see it's a 40-mark question. Then question 7, what I've done is just to give you a feel of the various IPSAS. There are short scenarios on each question, okay? There are 4 of them, so just trying to give you, there's IPSAS 5, there's IPSAS 11, IPSAS 14, and 19. Okay? So just short questions. So just to see, so that you prepare yourselves and you know how examiners can examine on the various standards. Now, like I said, I'll concentrate on the top tips. For question 1, you find the question is basically about the core principles. It's a knowledge-based question, but be aware of the command words used. The examiner is saying describe. So make sure that you describe. If you don't describe, problems. You may not get the full marks. Okay? So description is very important. And I've given what description means, what describe mean in the text of the presentation. In solution 2, which means the solution for question 2, what we are saying is you have to read the command words again properly. In this case, the examiner used the command words. He said describe and contrast. This can be intimidating, but don't worry. As long as you know the definitions, you can still get more than half of the marks. But it's important that you appreciate whenever they're using command words, maybe they expect much more from you. But if you don't know, please justify. Question 3. This was about the cash flow. Okay? But the focus was not on the whole statement of cash flow. It was on the cash generated from operating activities. So most students may miss out. They may want to prepare the entire statement of cash flow. We are saying no. First, when the question asked, you may just waste your time and you not earn any marks for producing the full. Here, our interest in operating cash flows, using the direct method and the indirect method. It's a good illustration on those aspects of the statement of cash flow. Solution 4, solution 4. This describes, okay, what we think is supposed to be done. Okay, for example, we are saying it's basically a straightforward question with no challenges. Okay? All you have to do is demonstrate that you are able to cover the entire syllabus. So when you're preparing for these exams, please cover the entire syllabus. What makes people fail to answer such straightforward questions is lack of adequate preparations for these examinations and failing to recognize the command weight. So it's important that those differences, you know what they are, and you're able to describe, don't just list or state. Solution 5 is just a straightforward question. We want you to apply your skills. You are now preparing financial statements using IPSAS 1. Okay? So make sure that you're able to prepare. And the examiner is talking about the method to use. It's the function of expense method. Okay? There's also another choice. He wants you to discuss those things. So the preparation must be straightforward. But again, the failing point for students is spending too much time on part A, the preparation, not knowing there's another part B where you can actually score marks on the theory aspects. So lack of knowledge regarding presentation methods can be a big failing. So it's important that when you're answering questions, answer the questions asked and spend the right amount of time. Don't overwrite on one end. Solution 6, which relates to question 6, what we are saying is this is a very important question. So when you go through it, you have to master. You must not prepare statement of financial position, statement of financial position, statement of financial performance. Okay? If you are looking at the public sector, we'll be saying for statement of financial performance, we'll be saying statement of profit or loss. But here there's no profit or loss. So you just say financial performance. So it's important you appreciate that. But again, you are guided. You have to use the guidance, the formats given in IPSAS 1. Okay? So therefore, common mistakes for students, lack of having a systematic approach or methodical approach to answering these questions. Also, starting complicated parts of the question. When you are trying to prepare financial statements, there are certain things you can just pick from the trial balance into the financial statements, and then you earn your marks. Others you may have to work. Now, when you're working out, the idea is you must have an appreciation of the relevant IPSAS. If you don't have an appreciation of the relevant IPSAS, it may be very difficult for you to attend to the additional information. But like I've said, start with the easiest. Start picking out those which are straightforward, push them through the statement of financial performance, including the statement of financial performance. So, position also. It's very easy. That's how people go around this problem. Because without doing that, you waste time and you earn no marks at all. And poor management of time. Poor management of time is a very big issue. Do not answer. Some students will say, no, I want to manage time, so I'll start with section B. Others start with, there's no harm. But the most important thing, work within your time. Exam is 3 hours, so make sure that you're able to work within that time. Like I said, is about the various IPSAS. For me, some of those are the IPSAS which are regularly examined. Okay? So what we expect you to do is to be able to master the various standards and be able to apply the accounting concepts according to what is guided by the standards. If you don't know the standard, it simply means you may not be able to do these questions. So it's important that the standards are well mastered. If possible, attend lectures. Don't do self-study. Self-study, you may not get much. But when you're being guided, you'll find that answering these big questions becomes an easy thing. And passing becomes an obvious thing. I now turn to the last unit of your syllabus, that is Unit 4. Unit 4 concerns performance measurement in public sector organizations. And direct that 15%. The 15% can be the lifesaver between you passing and failing. So it's important that that 15% is taken care of by studying adequately, preparing adequately for these exams. Once you cover the entire syllabus, including the Unit 5, the chance of passing are very high. We have come to the end of the presentation. I hope you've enjoyed it. Should you have any queries or clarifications, please do not hesitate to contact the Zambia Institute of Chartered Accountants. Thank you very much.